In this video, beware of lenders' fixed rate mortgage deals. As we're all aware, over the last week or so, more than half of the mortgage products on the market have been withdrawn, but they are gradually appearing again, albeit at much higher rates. As it stands, the average seems to be around 6%, with some even higher, and for buy-to-let, the all-important stress test has been raised to as much as 140% of the applicable rate. The stress test measures if the rent will cover an interest rate that is agreed by as much as 1.4% over the agreed rate, which is making it almost impossible with anyone with above a loan to value of 50% to remortgage, especially in the south in London. I have noticed one other alarming factor that I believe you should all be aware of. Those of you looking for a fixed deal may have noticed that 5-year fixed rates are more often than not cheaper than 2-year rates at the moment, which indicates that lenders believe that they will benefit from falling rates in years 3, 4 and 5 perhaps. However, some lenders have quietly covered themselves, and you may not have noticed, to ensure that you do not benefit in the short term with a fixed rate and then leave when the market swings in favour of the lenders. But what exactly have they done? I have been looking around to keep track of what is going on, as I do, and when I check the fees chargeable by the mortgage works in particular, I noticed something alarming. In the past, their early repayment charge, which was a fee for settling your mortgage before the end of the agreed period or exceeding any agreed overpayments, they normally allow you to pay between 5 and 10% over your agreed payment per year. That was previously 2%. This has now been increased to a maximum of 7% for overpayments and 5% for early settlement. That is a horrendous figure. I obviously don't have time to check the small print for every deal on the market, but I would hazard a guess that the mortgage works are not the only lender to do this. Therefore, if you are thinking to refix your mortgage or you have recently received an offer, I would ensure that you establish exactly what the early repayment charge is for your particular lender. In the case of the mortgage works, a 5% early repayment charge on a £250,000 mortgage, for example if you need to sell within 5 years, could be a whopping £12,500. In some cases, lenders used to reduce their fees on a sliding scale as you had less time to go before the fixed rate expired. But it seems that in this case, it applies for the entire duration of the deal, which is very unethical. I can't say whether you are better off to take your chances with the variable rate at this time, but one thing is for certain, check your mortgage offer very carefully, and if in doubt, do not proceed. I hope that has been helpful to you. Please do check the small print, because lenders don't miss a trick, and if they can't catch you out one way, they'll catch you out another. As it stands, we still don't know exactly for definite where things will be in 1 or 2 or 3 years. So lenders pulling all their products and reintroducing these longer term fixed deals at much higher rates, but covering themselves by making it very expensive for you to get out of, is quite worrying. So please take your time, and if in doubt, do not sign on the dotted line. Thank you very much, and I will see you in the next video.